you guys asked for like a fundamental show, right? How do I do my due diligence, my DD? What do I look at? What questions, Luke? Why are you still here? What questions do I ask? You asked, we delivered. Allow me to present Ask the VC with Jeff Ransdell from Fuel Ventures. Going to bring Jeff on out. Luke, stop messing with me, man. Come on. It's already been a crazy day. We got the Fed announcement. I've got Jeff here. Let's do this. Jeff, how are we doing today?
Spencer, we're doing fantastic. How are you?
We are doing fantastic as well. So we got a lot to get to and not a lot of time to get. So let's just jump right in, guys. This show is Ask the VC. Jeff is a VC. Don't interpret that to think that this is going to be like a Shark Tank style show and you can pitch your idea. We're not quite there yet. We could be there, but for the moment, we're going to let.
That would be interesting, though, Spencer. We could go there someday. I like that.
That could be good. For the moment, we're gonna let Jeff just sort of talk to us about how he thinks about companies. He's pitched companies like all the time, right? And a startup pitch is not that dissimilar to looking at a stock. It's a different market, but the questions you ask should be pretty similar, right? You got to know your numbers, as they always say on Shark Tank. So with that being said, Jeff, I want to start off with this question. Let's just start with like your overall. Actually, no. Let's start with your background. You were at Merrill Lynch for a long time before you became a VC. That's right.
A long time, Spencer. I was there 21 years. Yeah, started off actually way back when as an analyst during the .com days. So that's really kind of where the whole thing started. And I kind of kept my foot on the creative economy, if you will. It's really how I kind of look at it, and started seeing the world, as far as technology democratizing information, which obviously changes the world that you and I are in and how people construct their portfolios. And I left Merrill and Wall Street in 2016 to start this venture capital firm, Fuel Venture Capital.
And so can you give us your like high level view on markets right now, and from there we'll go into like the specifics and the nitty gritty of some questions we have.
Yeah, I mean, I think today is a great day to actually be asking that question, right? We have some Fed announcements coming out today, so I'm going to be pretty bold right now and just say much to do about nothing. My humble opinion, but really, I think what you've got going on here is this war between what I'll call the bond posse, if you will, and the Fed, right? The Fed continues to put stimulus into the marketplace. We're buying up, trillions of dollars. I think, what is it, $120 billion right now that the Fed chairman is buying up in different bonds and notes. And Janet just put $1.9 trillion into the marketplace. And I think that's just kind of scaring our bond policy, if you will. And there's this big fight that's going on. And as a result, I think you have some investors who are saying, well, listen, are things heating up too quickly and we're going to start to see some inflationary effects? And if that's the case, then my at-risk equity is no longer in play. And you're starting to see that in the markets right now. You're seeing the NASDAQ selling off, which, when yields are increasing, that's normally what you see. But don't forget, last week, the NASDAQ hit broke its 3-week loss. Everything was up. I personally believe, and I'm not a buyer in this whole, the growth momentum being dead. I'm not. I think it's an awesome opportunity for a lot of us that believe in the long game here, that we can be buying some great equities, especially in the tech space, on sale. And I think and that's really what I'm doing right now.
I was on mute there talking to myself. That leads into my next question, which was, where are you looking right now? What area of the market are you bullish on?
Well, I think, you can play this a couple of different ways. Obviously, I particularly like, the big names, the big boys, if you will. Look at Apple right now. You can buy Apple at a pretty good price right now relative to where it was not so long ago. And when I personally believe when you can buy Apple at these dips, why in the world wouldn't you do it? Again, if you believe, as I do, you got to think about this thing in logic terms. You cannot be putting this much stimulus into the economy and at the exact same time say that the economy is heating up. It's one or the other. And so you as an investor have to figure out what side of the fence that you're on. I have a saying, you shouldn't straddle the fence, because if you do, you're going to expose your testicles. You got to figure out which side of the fence you're going to be on. I personally am more of a bullish guy. I believe that the markets are beating down, some incredible tech companies, and I don't think it's justified. I think a lot of it's oversold.
All right, so give us some names. Who's on your radar?
Well, I think if I'm buying today, and actually if it was yesterday, I like Salesforce a lot. I think that, as I was saying about technology, let's face it, what COVID has done for us is it's fast forwarded the future into today. So, these companies all over the world are needing to become more efficient and more effective, connect their employees. Salesforce is blowing through all of the projected numbers that anybody has given to them. They just increased their 2022 forecast. And I believe that this transformative technology and software such as Salesforce is going to continue to be, in play. I think it's a great buy right now. I think it's undervalued in my personal opinion. Margins are increasing, revenue is increasing. What's wrong with any of that? So to me, that's a no-brainer. I mentioned Apple earlier. Again, I just think whenever you can buy Apple at these discounts to where it was, it's just a good idea. These types of companies that are the king of the mountain, if you will, they're not going to get knocked off very easily. They're constantly iterating. And let's face it, everybody, I don't know, every 6 months, if we don't get a new one of these iPhones, everybody's pissed off. And the last time I saw, people are literally sleeping on the street so they can get access to the new one. I think that's pretty big demand. And I think anybody who throws, water at it is underestimating what that company, can do. I think Pinterest is an interesting company right now. Again, using the COVID pandemic as a foundation of thought. We have been purchasing a lot of things e-commerce. I think Pinterest brings a very interesting notion to the marketplace where creators and marketers can have a social media platform, but also make some money. And I think it's an interesting thing. And I think that if you look at that month over month, they grew their membership by 37%. Those are habits and rituals that are not going to go away very easily. And I think it's going to continue to move forward even after the pandemic is over. And so I'm a fan of that. Actually building a position in that company as I am speaking to you now. I like Peloton. Again, I think
this is an interesting time. Interesting time to have you on here, Jeff. Peloton, like everything else, it seems like in the last 5 minutes since that Fed announcement came out, last 10 minutes, it has been blasting off here. So tell us why you like Peloton.
Well, again, first of all, most individuals listen, I'm in Miami. We don't believe that COVID exists in Miami anymore. So you got to understand that where I come from and where I live right now, the pandemic feels like, I'm not saying it is, but it feels like it's over. And again, it's about habits and rituals, right? We have a lot of people around the world that didn't want to lose their health and fitness during the pandemic. And Peloton has been selling more of these damn cycles than you can shake a stick at. And people have gotten used to that. They've gotten used to the ease and the effort of not having to get in their car and drive to a gym, have to deal with all of that stuff. They can just simply, put on their workout clothes at whatever time they want to, get a very, very motivational workout in. The videos, the music, everything is doing very well. And again, in my humble opinion, as you just said, look at what it's doing right now. So, and I think that really is proof source to what I started our show off with, right? I think we all have to be careful. And again, it's about what side of the fence that you want to be on. But I think things like Peloton, which is this virtual fitness, I don't think it's going to go anywhere. I think that this company, I know the leadership of this company. I'm a big fan of theirs, and I think they'll continue to iterate and do more and more interesting things. And that's the one thing that I want everyone to really kind of take note of. When you're investing in technology companies, one of the things that I believe you really have to be thoughtful about is what you're investing in today is not necessarily what that company is going to look like even 3 or 4 years from now, because it is a technology-based company. And technology-based companies are constantly putting pressure on themselves to iterate and create better interaction between them and their consumers. So I think Peloton has a lot of different things that they could do and go into different verticals that we don't even know what it is today. So that's one of the things that I think is super interesting about a company like Peloton.
All right, the chat's been all over this, and I don't really know what's going on out there, but there's some algorithm who's just buying everything right now. I have not had time to look at the Fed statement. I don't really know what it said. I guess they're seeing a rate hike in 2022, but pretty much everything with the exception of the TLT, every stock, every major index is up, like not just up, but blasting off. And then in the last few minutes here, you can see SPY there. There's IWM, QQQ, the diamonds. I mean,
where's Apple at?
Where's Apple at? Great question.
Let's take a look at Apple.
All right, 124. We are still down on the day, but we're gaining those losses back here.
Yeah, I wish the Fed would have waited just a little bit longer, because I would have looked like a brilliant man at this moment. But I bet on this. Again, I think one of the things that's happening out there is there's just a lot of, look, the bond players want to protect their position. They're going to do everything that they possibly can to try to drown us out. But I just don't believe that the market is there. You keep looking at earnings right now. They're strong earnings. They're blowing through the numbers. I mean, everything just looks good right now. And I'm going to tell you, we were just talking about Miami. I'm going to give you another. Ride my horse into the future a couple of months and tell you what everything's going to look like, because I see it right now in Miami. It's a damn renaissance, and I really believe that that's what's going to happen here. I mean, the human condition is not meant to be inside of the cave. That was 300,000 years ago. We came out of the caves. We're not meant to be that way. We're social animals, and we've been kind of thrown into our caves now for over a year. And I see it here in Miami. People are absolutely going crazy. I think we're going to see a renaissance like you and I have never seen in our lifetime or will ever see again. And I really think people need to just buckle up, be focused, identify the themes that you like, be smart about it, allocate your capital responsibly, look for the dips, because you're going to continue to see this volatility. There's no question in my mind. But I think if you're smart and you believe in the long tail, you believe as I do that it's going to be an incredible party for the next couple of years. Take advantage of it. My humble opinion.
Okay, Jeff, we went through a couple names that you like. Was there any more you wanted to drop? If not, we can go into some of the more the more philosophical part of this show, where we ask you how you do your research and what questions you ask when looking at a company, what sources that you use.
Let's get controversial before we get into that.
Okay.
Let's talk about Uber. I think there's a lot of people that like to throw water on Uber. Uber just lost, I think, an important legal battle in the UK. Yep. Now all of a sudden, the drivers have to be employees. First of all, I think that's the dumbest thing that you can even imagine. I'm an early investor in Uber. I spend a lot of time. I'm a huge fan of this organization, and I think I talk to a lot of Uber drivers. They think it's stupid. I mean, it does. The gig economy is there for a reason, and people have the ability to work when they want to work, not have to report into anybody other than the people that are sitting in their back seat. Again, as I said, with respect to Peloton, I believe that Uber today will look very different 4 years from now than it does today. And I think that right now it's at the prices that it is right now, I don't understand it. I think that in the near future you're going to see better things. And I think, it's just downward pressure based off of these legal lawsuits and whatnot that's going on. Shake Shack just announced a partnership with Uber. That was pretty big. Again, little controversial, my opinion, but I'm a fan of Uber. I'm a buyer of Uber on these dips.
It's down today. I guess they're saying that it'll make it that much harder for them to get profitable, which is what Darius talked about.
That's the theme. Yeah, that's the theme. Yeah. But it'll happen.
Yeah. Okay. All right, Jeff. The show is called Ask the VC, and we brought you on really because we asked, hey, what kind of show do you all want to see? And people said, give us a show about the fundamentals. Give us a show. We're not really looking at charts or patterns. We don't really care about that for the purposes of the show. We want to know, how do you do your research? You get pitched these companies all the time. They're private, but the point still stands. How do you do your research? So let's start with this. What resources do you use to research? It could be private or public companies.
Well, before we even get into that, let's just go back into some fundamental thought process, okay? Sure. So what's the biggest differential between public investing and private investing? The biggest differential is knowledge, right? In the public markets, we can gain as much knowledge as we want to. There's an abundance of information, right? And we can read that information as we're talking about right now, research, and we can make educated decisions on investment decisions that we make. In the private market, it gets more difficult because knowledge and information is scarce. And that's where talent and a tremendous amount of hard work kicks in to try and gain that ability or that knowledge to make the same, intelligent investments. And the earlier the company is in its life cycle, the more difficult it is to gain that information. And sometimes, to be really honest with you, and you've probably heard this before, but in the early life cycles of private investing in companies, let's call it seed or, bridge to Series A, a lot of it has to do with just your gut and your belief system in the founders. Do they come across as passionate? And that's one of the things that I'll tell you right now. I go into a meeting with a group of people who want me to invest in their company, and they can't get me excited. I'm going to be kind. I'm going to be a nice guy, but I'm not going to invest in their company, because in those early stages, that's really what it is. You're investing in people's energy, their passion around what it is that they're doing. And if you can get me to believe in what it is you see 5 and 10 years from now, then that's a company that I'll invest in. As you get a little bit later into the life cycle, what I like to say is, by the time, in today's day and age, by the time you get to a Series A round, you can't really hang your hat anymore on that energy or the inspirational game, if you will. Now you have to start to show that you have product market fit, that the technology that you have developed is not just filled with a bunch of bugs and breaking down all the time, that it actually works, and that the end consumer is attracted to it and is using it. And you see that by the amount of revenue that you're bringing in the door, the amount of customers that you're bringing in the door. Are those customers staying? Are they sticky, or are you losing them? At that Series A stage, you really have to be asking yourself a lot of questions, and you have to be experimenting a lot. Is this going to work? Okay, that didn't work for a damn. So here, we got to try this. And there's a lot of that going on. From a research perspective, again, in those early stages, there's not a lot of knowledge. So you're really having to really look at that product market fit, those customer evaluations. Are you growing month over month in your reoccurring revenue? What does your burn ratios look like? Are you spending more money than you're bringing in the front door? And again, even at that stage, it's how hard are these founders working? I will tell you this: there's a lot of people that say, "Hey, I want to start my own company," but the fact of the matter is, it's not easy, and you have to be able to and be willing to work, 60, 70, 80, 90, 120 hours a week to make these. You almost have to birth these companies into reality. And as you start to get even later now into the life cycle, let's call it a Series B, maybe a Series C, you can see the exit fairly clearly. Now you're really judging that company as you would at a stage of the life cycle. This company is either going to go public or it's going to be purchased by a major corporation. As a venture capitalist, that's our job. And we're trying to constantly figure out which of those avenues is the best avenue for us to take. And right now with SPACs, the public markets are very attractive. And so, at that particular point, it's all fundamentals, right? Revenue growth. I want to see double, triple doubles is really kind of what we're looking for at those times. So
wait, explain that. Tripling revenue growth quarter over quarter. What does that mean?
Tripling year over year. At that Series A stage, you've got to be growing. And that's why investors want to invest in these private companies, is for growth, right? So we call it triple, double. I want to see a triple in 1 year. I want to see a second triple in 1 year. And I want to see a double in the third. That's what we strive for. It doesn't mean it's going to happen every single time. But believe it or not, COVID has been incredible for technology. We all know that. When it first kicked off a year ago today, I was pretty afraid. But let me tell you something. It has been an incredible year for technology.
It's interesting that you mentioned SPACs. What do you make of the SPAC? It's not a new instrument, but of course there's been an explosion in the last year. Good, viable alternative to IPOs, overheated, somewhere in the middle. What is your take on that?
I'm a huge fan of SPACs. I'm a venture capitalist, so of course I am, right? So again, let's talk thesis. Let's talk, just get ourselves aligned from a thought process. If you think about the SPAC space, what's their biggest blocker, Spencer? Their biggest blocker, right, is to identify a proper target that they can uplist into the marketplace where the investing public finds it attractive and buys the stock. That's their biggest blocker. As a venture capitalist in the private equity space, my biggest blocker is getting to the exit. I can spend 5, 8, 10 years curating a company to an exit, but if I can't find, someone to take me into the exit, then there's no way for me to monetize that effort. My biggest blocker is the exit. So in my opinion, what I love to see right now is this coming together of the public thought process and exit in the SPAC and your private equity venture capital. I think and it's one of the things that I was saying that I like right now. I like SPACs that have a management team that is focused on technology companies. And I like a management team in a SPAC that actually has experience, or maybe if you're even lucky enough, actually owns or is a general partner of a venture capital firm right now. Because all that's telling you is they have an abundance of targets that they've been working on for a number of years. They have significant influence. They have significant time, energy, and mental capacity that's been invested in that company. And therefore, those blockers are gone, right? So to be more concise, I like SPACs. I like SPACs that are managed by the right people. I think that we as investors, and again, I'm not here to take the piss on anything, but what I would say is, if you don't have a background in finance, if you've never been responsible for managing other people's money before, I as an investor might stray away from that and look more toward these managers that have experience in the space, that know the game very well. And I think if you're doing that, SPACs can be very interesting from an alpha perspective. I think it's just the whole notion of the SPAC is giving investors like you and I and all of our listeners and the individuals who are tuning into our shows, they give us the ability to invest in these technology. They went public. Three years after, they started things very quickly. And therefore, we as investors had the opportunity to invest in that company and ride that wave of growth. Now, conversely, we were talking about Uber a few minutes ago. Mm-hmm. Uber is the exact opposite. Uber had top line revenue in the billions, been around for 11 years. That's a really long time. And so there was a tremendous amount of growth and wealth creation, but it wasn't created in the stock market. It wasn't created in the public markets. It was created in the private sector, which is why I'm in the private sector now. And I left the public sector because the private sector is where the opportunities are. And so these SPACs that are focused on these technology companies, I like them. And I think they give all of us an incredible opportunity, if we do our homework, to manufacture some interesting alpha.
I asked for questions in chat, and they're coming through. So let's cover a couple of questions from the chat here. People just want your take on things. They want your take on crypto. They want to know how invested you are in cannabis. I'll leave you with those for now.
Okay, let's start with crypto first. And, I'm probably going to look a tad old school on this, but in 2017 and 18, I was actually involved in creating a crypto exchange. And so I got to see the space from the back side of the curtain, right? There's an old saying, if you actually knew what was going on behind the curtain, you might do things differently. Another way of saying is if you actually could go into the restaurant, into the kitchen and actually see how the food's being made, maybe you eat it, maybe you don't. It's the same thing here. I really got to see this space from the kitchen. I think that the underlying technology of blockchain is amazing. I think it has a significant part of our future. But the whole crypto, I'm not a buyer. Probably because of my former life being in, on Wall Street and finance and just understanding AML and understanding how the SEC and the government with laundering money and dirty money and all those different kinds of things, it just scares the hell out of me. And I think it's something that everybody needs to be careful about. It's unregulated. You don't know what the hell it's going to do. I know there's been a tremendous amount of money that has been made, and I haven't made any money off of it. So there's your disclaimer. But I do think that things need to get dialed in. I think that regulatory thought process has not even entered the game yet. And when that happens, it's going to look very different than it does today.
And then a question, I don't remember who brought it up. I apologize. Jeff Cavallari, how vested or invested is Fuel in cannabis?
We absolutely have no cannabis portfolio companies in our portfolio. One of the things to keep in mind about Fuel Venture Capital is we only look for exponential technologies. Now, what the hell does that mean? What it means is we're looking for technologies that can exponentially grow. We were talking about growth, triple doubles a little earlier ago. I mean, let's use Uber or Airbnb as an example of an exponential technology. Airbnb, for the most part, doesn't own anything, right? If you compare Airbnb to like a Hyatt, think about the brick and mortar and level of investment that a Hyatt has to go through relative to an Airbnb. All Airbnb is a software package that connects in consumers that are looking for a unique way to go on a vacation or a unique place to stay overnight when they're traveling, and a owner of a property that's not using that property at that time and wants to make a little extra money. And look at where Airbnb is. I mean, Airbnb got to $1 billion valuation in 6 years when it took Hyatt 60 years to get to $1 billion valuation. To me, that's exponential growth, and that's the kind of thing that I'm looking for. So I'm not against cannabis. I think that cannabis is somewhat similar to the conversation we had about crypto. It's not federally regulated. I still think that there's some issues that are going to happen there. And you still have the black market. I mean, let's be honest. If you like your bag of weed, you have two choices. You can go and buy it at the corner and pay 5 times more for it, or you can continue to buy it from the guy or the gal that you were buying it from 5 years ago, for a lot cheaper. It just really depends on how you want to look at it. But I think that cannabis is going to continue to struggle a little bit. It'll find its way eventually, but I'm not a buyer of the positions at this time.
Here's a question that I don't quite know if you can answer, but I'll ask it anyway. Now I have to go back and find it because we have so many. Oh, yeah. What do you see? Let me pull it up on the screen there. What do you see with Virtuix and the Omni One system?
You know what? Really don't have an opinion on it. Haven't been following it. Not my wheelhouse. Can't answer that one.
That's okay. That's quite
as you can see, when I have an opinion, I'll give it to you, be it right or be it wrong. But if I don't, I'm not gonna blow smoke.
Okay, Jeff. Before we hop off here, I just wanted to go a little bit more into resources that people can use to do research? What resources that you use when you're looking at stocks? Because you're a VC, but I'm sure you also. We just spent 10 minutes talking about stocks you like: Apple, Pinterest, Peloton. You do your research. What resources do you use? What sites do you use? And what are you looking for?
So I think there's a couple of things, right? I think just for the average person walking down the street that's wanting to, or average investor that's walking down the street that wants to just have more information and more knowledge. I'm a big fan of Yahoo Finance. I can put different alerts in my phone and throughout the day, I can get information and things that are going on with companies that I have a lot of respect for, or maybe I'm just looking at, want to see how things are going. I'm a fan of Yahoo Finance for many, many years. My go-to research is Morningstar. And I know that not everybody has access to that, but I think Morningstar is outstanding. And again, I'm not blowing smoke. This isn't me trying to, impress you, but to impress upon you. I think this show is amazing. And I think that people who have interest in investing and want to become better, I think what you guys are doing is really amazing. I was fortunate enough to get to spend some time with Jason about a month and a half ago. And, my team and I have been following what you guys are doing. I think that there is a hell of a lot of amazing information and knowledge is coming out of this show right here. And I like the interaction. I like, the realness of it. Right. So I think you guys are doing a job, and it's something that I've been spending a lot more time making sure that I'm tuned into, and I think that people who are really interested in the space should do the same thing. And again, that's not to I wasn't paid to say that. I'm saying it because I believe it.
And then when you're doing your research, what sort of things you talked about wanting to see year-over-year revenue growth from startups you look at, but when you're looking at public companies and looking at stocks, what sort of metrics do you put the most weight into? Are you looking at valuation ratios? You're looking at cash flows, and what do you want to see?
I am a big believer in valuation, both on the public side and the private side. I think it's important to pay the right price for something. But again, remember that we're buying revenue it's not today, it's revenue in the future. And I think that's one thing that investors tend to forget from time to time. I like earnings per share. I think that's good. We were talking about it earlier in our show, but about what side of the fence that you want to be on. But I'm on the side of the fence that these are great opportunities to buy these tech stocks. I'm not a big believer that we're going to see all this inflation that's coming in. But if you are, right, if you're one of those people that do have that concern, a nice hedge is in the financial area, in something like Bank of America, as an example. I mean, I think that what you pay for the profitability that company kicks out is very low relative to its peers. And so that's something that I like to look at. And you know what? We live in a world where information is very democratized and it moves very quickly. I think hype is a big deal. So if there is a company that is getting a lot of hype, that's getting a lot of interaction on the media, that's popping up on social media in a lot of different places, I think that particular company is going to do well. May not do well for the long term, but there's definitely an opportunity for trading in the short term. And I think we as investors have to understand that the things that we used to do when making investment decisions, which were just really fundamental technical analysis, you have to augment that with just how the hell the world is working today. And one of the things that I like to tell people is, and we don't think about this enough, but, Spencer, how you interact with the world around you today is completely different than it was even 5 years ago. Yep. So you have to be thinking about, well, how am I interacting with the world? What am I using, right? How many different apps am I using on my iPhone on a daily basis? Do I own any of those? How am I eating on a daily basis? Am I really going to a restaurant, or am I ordering it? Do I own that company that's delivering that food to me? These are the types of things that I think are really different today than they were even 5 years ago. And I think that there's a tremendous amount of investable themes that we take it for granted, and they're right there in front of us.
Yeah. All right. I put Jeff's Twitter handles, both his personal and for his firm, up on the screen there. Jeff Ransdell VC and at Fuel VC. To follow him on Twitter there. Jeff, we have a lot more to cover, I think, for the future. This was a good start, but there are more questions from chat, more questions that I have, and I'm sure more opinions that you have. But I think for now this is a good place to wrap it up. Everyone, please smash that like button for Jeff. I've prompted it there on the screen a couple times now. Thank you very much for the likes. Jeff, thanks for the time today. It's been a crazy day. We literally had you on during a Fed announcement, which was interesting, and the market's kind of doing some weird stuff right now. But I thank you for your time, and we will we'll get you back.
Perfect, Jason. As I said to Jason Spencer, you know, we're down in Miami. You guys want to broadcast live down here? You're welcome. This is your home.
Hey, we just got through a Michigan winter, and we only get a couple weeks of sunshine here a year. So we may take you up on that offer, because it's
very good, my friend.
It's dreary. All right. Jeff Ransdell, again, Twitter handle up on the screen. Wait a minute.
And by the way, that Twitter handle is also the Twitter handle for my my Instagram, which I spend a lot more time on. And if you want to learn about the portfolio companies and Fuel Venture Capital, we spray my Instagram with all kinds of things right there. So you can also go there.
All right.
Spencer, it's great to see you, my friend. Have a legendary day.
Have a legendary day. That's fantastic. Thank you. You too, Jeff.